Robinhood stock is on fire. After a stretch of strong momentum, HOOD is up about 9% in the past week, around 40% for the month, and a staggering 184% year-to-date. For a stock that many once wrote off as a meme-era relic, this comeback is serious, and now, after an impressive second-quarter earnings report, the rally could have even more room to run. In this video, we're breaking down what's fueling Robinhood's surge, the key numbers from Q2 that impressed investors, and why some analysts believe this could just be the beginning for one of the most controversial and now compelling names in fintech and crypto. Let's start with the big picture. Robinhood stock has been on a tear. It recently pushed through the $100 mark and hit fresh all-time highs, reaching just over $113 during intraday trading. Volume has been unusually high, and this isn't just retail traders jumping in. There are signs that institutional investors are starting to take a closer look. Now, the fuel behind this surge is more than just hype. There are fundamental drivers, starting with a blowout Q2 earnings report. Robinhood posted earnings per share of 42 cents, well above analyst expectations. Revenue came in at $989 million, up 45% year-over-year and also beating consensus estimates. Transaction-based revenue totaled $539 million, a 65% increase compared to the same period last year. That includes $256 million from options trading, which remains a strong driver, and a massive $160 million from crypto trading, up nearly 100% year-over-year. To put that in perspective, Robinhood handled $28 billion in crypto trading volume in just one quarter. And even though that number slightly missed some aggressive analyst targets, it still shows that crypto remains a major growth engine for the platform. Average revenue per user increased to $151, which is a healthy sign that users are not just showing up but actively trading and engaging with higher value services. Robinhood's total number of funded accounts reached 26.5 million, and total assets under custody grew to $279 billion, nearly double what it was a year ago. These are not the numbers of a struggling app. These are the numbers of a company that's finding product-market fit in multiple verticals. So what's behind this resurgence? There are a few major catalysts driving both investor confidence and real business growth. First, tokenization. Robinhood recently launched tokenized US stocks and ETFs for customers in the European Union. This allows EU users to trade blockchain-based representations of real US equities, over 200 of them, in fact, commission-free and around the clock. These tokens are initially being issued on the Arbitrum blockchain, a well-known Ethereum Layer 2 network. But that's just the first step. Robinhood plans to migrate these assets to its own proprietary blockchain, allowing for 24/7 trading of tokenized stocks and possibly a whole new era of on-chain financial products. This is more than a technical novelty. It addresses real-world problems, time zone mismatches, market closures, and barriers to entry for international investors. It's a powerful idea, giving global users access to US stocks in a way that feels as fluid as trading crypto. And Robinhood isn't stopping with public companies. They've also floated plans to offer tokenized exposure to private companies like OpenAI and SpaceX. While these tokens don't represent direct equity, they offer synthetic exposure using structured products, giving retail investors access to private markets that were once completely off-limits. Now, let's add another layer, crypto. Robinhood has been expanding its crypto services aggressively. They recently completed the acquisition of Bitstamp, one of the oldest and most respected crypto exchanges globally. That acquisition gives Robinhood access to new regions, including Europe and Asia, and expands their ability to offer more advanced crypto trading tools. They've also launched staking for Ethereum and Solana, allowing users to earn passive income from holding their tokens. And just recently, they introduced perpetual futures trading for crypto in Europe, another step toward making Robinhood a serious player in the global crypto trading space. All of this is happening alongside broader legislative support. The U.S. House of Representatives recently passed the Clarity Act and the Genius Act, two bills that provide a more structured regulatory framework for stablecoins and digital assets. While they still need to pass the Senate, the momentum is clear. U.S. lawmakers are beginning to warm up to the idea of regulated digital finance. That could remove one of the biggest overhangs that's held Robinhood, and the crypto sector more broadly, back in the past. Now, Wall Street is noticing. Analysts from Morgan Stanley, JMP Securities, and Piper Sandler have all raised their price targets on HOOD, citing strong earnings, crypto tailwinds, and the company's growing role in the tokenization trend. Some of the new price targets range from $110 to $125, and that's with a conservative view on future product rollouts. There's also growing speculation that Robinhood could be added to the S&P 500 in the near future. While it wasn't included in the most recent reshuffling, the company is now profitable, meets the market cap requirements, and is becoming a more stable and diversified business. If it does get added, that could trigger billions of dollars in inflows from index funds and ETFs. But before we get too carried away, let's talk about some risks, because they're very real. The biggest one is regulation. European regulators, including the Bank of Lithuania, have already opened inquiries into Robinhood's tokenized products. There's concern that tokens representing private companies like OpenAI and SpaceX could mislead investors, especially since those companies haven't endorsed or authorized the listings. And in the US, even though legislation is moving forward, there's still no clear framework for how tokenized stocks will be classified or regulated. If the SEC or another agency decides to crack down, Robinhood could face legal challenges or be forced to pause parts of its platform. There's also the technical risk of building and maintaining a proprietary blockchain. That's not easy. Even major crypto-native projects struggle with uptime, scalability, and security. Robinhood will need to deliver a smooth and safe experience, especially if it wants to earn the trust of both crypto users and traditional investors. Another thing to watch is user adoption. Tokenization is still a new concept for most retail investors. Robinhood will need to invest in user education and make the trading experience as intuitive as possible. If people don't understand how the tokens work or feel confused, it could limit uptake and stall momentum. Even so, the broader outlook remains compelling. Robinhood is no longer just a stock trading app, it's evolving into a hybrid platform that blends fintech and crypto in a way very few others are attempting. They're expanding globally, entering new verticals, and delivering strong financial results quarter after quarter. If they can continue executing while managing regulatory risk and simplifying the user experience, there's a real chance that Robinhood becomes one of the leading financial infrastructure companies of the next decade. For now, the market seems to agree. The stock's rally isn't just hype, it's being backed up by user growth, revenue expansion, and a clear product roadmap. Robinhood still has something to prove, but if they can deliver on even half of what they've laid out, there's a lot of upside left on the table. Thanks for watching. Make sure to like, comment, and subscribe if you found this update helpful, and stay tuned for more deep dives on the companies shaping the future of finance.